Okay, good morning, grade 12 youth lead. Let's have a short review about our previous topic discussed last Monday. This is about financial planning process. Okay, yung first part po. So when I say planning, it's a very much related to another function of management or management function, which is controlling. And these two management functions reinforce each other and are very important for the success of an organization. Management planning is about setting the goals of the organization and identifying ways on how to achieve these goals. This may be broken down into long-term plans and short-term plans. Long-term plans are reflected in a company's business strategy. In the process of planning, resources have been identified. So these resources include workforce resources, production capacity, and financial resources. Okay, once a plan is set, it has been quantified. So when we say quantified plans, these are in a form of budgets and projected financial statements. So this budgets and projected financial statement has compared with the actual performance. This is where the controlling function comes into play. It does not mean that if actual performance falls short of budgets or the projections, the management is not doing its functions. Reasons have been identified for the shortfall so that corrective measures has made. In addition, the analysis will show whether the reason for not meeting the projections are due to management incompetence or factors outside its control. Okay, Dorothy, steps of financial planning. First, set goals or objectives. Second one, identify resources. The third one, identify goal-related tasks. Number four, establish a responsibility centers for accountability and timeline. Number five, establish an evaluation system for monitoring and controlling. And number six, determine contingency plans. Okay, let us now proceed to the preparation of budgets and projected financial statement. So what is budget? A budget is a description in quantitative, usually monetary terms of desired future results. The process of preparing the budget requires management at all levels to focus on the future of the business entity. There are different examples of budget. So one is a sales budget. Sales budget is a prediction of the firm's sales over a specific period based on internal and external information. So the sales budget has constructed by multiplying budgeted unit sales by the selling price. So this is an example of a sale budget. Okay, sales budget of ABC company. Okay, so series number 1 and 2, particulars, sales unit forecasted, okay, times price per unit, and then the sales revenue. Okay, for the quarter 1, the sales unit forecasted is 6,000. Okay, and then the price per unit is 100. So 6,000 times 100, the sales revenue for quarter 1 is 6,000. Okay, for quarter 2, the sales unit forecasted is 5,000 times 150 price per unit. Okay, the sales revenue is 7,000 or 750,000. Another examples of budget is production budget. Production budget is a financial planning related to the units of production. that the management think that the business should produce in the upcoming period to match the estimated sales quantity based on the management's judgment related to the competition in the market, economic conditions, production capacity, consumer prevailing demands, and past trends. This is the example of production budget of XYZ company for the year ended December 31, 2019. Series number 1. Under the particulars, sales unit forecasted 8,000 for quarter 1, for quarter 2, 9,000. Then add finished goods inventory for quarter 1, 2,000, quarter 2, 3,000. And then the total productions for quarter 1 is 10,000, and then for quarter 2 is 11,000. And then we will less the beginning inventory of finished goods. Okay, for quarter 1, the beginning inventory for finished goods is 2,500, and then for quarter 2 is 2,000. So the units to be produced for quarter 1 is 7,500, and for quarter 2 is 9,000. Another examples of budget is cash budget. Cash budget is a statement of the firm that has a plan, inflows and outflows of the cash. So if there is a cash in a transaction or transactions, the cash account is increased. If there is a cash out in the transaction or transactions, the cash account is decreased. So cash budget, okay, forecasts the timing of these cash outflows and matches them with the cash inflows from sales and other receipts. So the cash budget is also a control tool to monitor the way the company handles cash. Okay, so this is an example of cash budget. Assume selling price is 100 pesos per unit, sales for each month that has expected to be collected as follows. Month of sales, 20,000. A month after sales, 50,000. And 2 months after sales, 30,000. Let us now proceed to projected financial statement. So projected financial statement is a tool of the company to set an overall goal of what the company's performance and position will be for and as of the end of the year. Okay? Or it sets targets to control and monitor the activities of the company, or forecast or calculate the following reports like projected income statement and projected statement of financial position. So this is the approach used in the application of the projected financial statement. So step number 1, forecast the income statement. Okay? Establish a sales projection. Project the cost of sales. Prepare the production schedule and project the corresponding production costs, direct materials, direct labor, and overhead for manufacturing companies. Estimate selling and administrative expenses, and consider financial expenses and determine the net profit. Okay, step number 2, forecast the statement of financial position. Project the assets needed to support projected sales. Project funds generated through accounts payable and accruals, and by return earnings through profits generated. Project liability and stockholders' equity accounts that will not rise spontaneously with sales, example, notes payable, long-term bonds, preferred stocks, and ordinary shares, but may change due to financing decision made later. Then letter D, determine if additional funds are needed. Now, to determine the funds needed or additional funds needed, we can use the formula given. Dun po sa next slide. Now, to determine if additional funds are needed in a certain business, we can use this formula. Additional funds needed, AFN, is equal to required increase in assets minus spontaneous increase in liabilities minus increase in return earnings. The additional financing needed by borrowing from the banks as a notes payable or by issuing long-term bonds, by selling new ordinary sales, or by some combination of these actions. Okay, step number 3, raising the additional funds needed. The financing decision will consider the following factors: A, target capital structure, B, effect of a short-term borrowing on its current ratio, C, condition in the debt and equity markets, or restriction imposed by existing debt agreement. Okay, step number 4, consider financing feedbacks. Depending on whether additional funds are borrowed or has raised through ordinary shares, consideration is given on additional interest in the income statement or dividends, thus decreasing the return earnings. Okay, let's proceed to illustrative case of Millennial Company. Diba na-download nyo na po yan dun sa Google Class. Double check na lang po yung ating copy. So, illustrative case, financial forecasting using percent of sales method. So, the Millennial Company has the following statement representative of the company's historical ability. So, ang nandyan po is the income statement and then the statement of financial position of Millennial Company for the year ended December 31, 2019. Check nyo po dyan sa income statement, ang sales po, ang given po ay 2 million. And then yung cost of sales is 1,200,000. So, to get the gross profit, ililess lang po natin yung 2 million sa 1,200,000. So, yung gross profit is 800,000. And then, yung operating expense po is 380,000. Okay. So, iless po natin yung 800,000 sa 380,000 para makuha yung earnings before interest and taxes. So, yung earnings po before interest and taxes is 420,000. And then, yung interest expense is 70%, 70,000. Earning before taxes is 350,000. And then, the taxes, which is 35%, is 122,500. Yung 122,500 is 35% of 350,000. Yan po yung earnings before taxes. So, yung 350,000, kukunin niyo po yung, kinuha po yung 35%. Okay? So, 35% ng 350,000 ay 122,500. Then, ililess lang natin yung earnings before taxes and then the taxes para makuha yung net income or earnings after taxes which is 227,500. Then, meron pong dividends dyan, which is 136,500. Let's proceed to the Millennial Company Statement of Financial Position for the year ended December 31, 2019. Yan naman po, nakita dyan yung assets, liabilities, and stockholders' equity. So, meron po dyan ang current assets and fixed assets. So, ang total po ay 2 million. Yung cash po ay 50,000. Yung accounts receivable, 400,000. Yung inventory is 750,000. So, yung total current assets is 1,200,000. Then, yung fixed assets is 800,000. So, again, yung total assets ay 2 million. Let's proceed to liabilities and stockholders' equity. Yung accounts payable ay 250,000. Accrued expense, 10,000. Accrued taxes, 20,000. So, yung total po ng current liabilities ay 280,000. And then, meron pong other liabilities pa, which is the notes payable bank, 70,000. Long-term debt, 150,000. Total liabilities, 500,000. Ordinary shares, 1,200,000. Then, return earnings, 300,000. Then, yung magiging total shareholders equity ay 1,500,000. So, i-add natin yung total liabilities na 500,000 and then total shareholders na 1,500,000. So, magiging total liabilities and equity po ay 2 million, which is balance. Okay? Okay, so this is the solution. So, bago tayo mag-proceed sa solution, okay, basahin ko lang po yung nasa unang slide. The firm is expecting a 20% increase in the sales next year. So, nag-expect po yung Millennial Company na mag-increase ng 20% yung kanyang sales sa susunod na taon. And management is concerned about the company's need for external funds. The increase in sales expected to carry out without any expansion of the fixed assets, but rather through more efficient assets utilization in the existing store. Among liabilities, only current liabilities vary directly with sales. So, using the percentage of sales method, determine whether the company has external financing needs or a surplus of funds. So ang gagamitin po dito ay percent of sales method. Titignan kung kailangan ba ng external financing needs or meron pong surplus sa funds. So this is the solution. Step number 1, forecast the income statement. The projected income statement will show the following. So, that one is 20%. Paki-correct na lang po, hindi po 120. So, since nag-expect po yung firm na magkaroon ng increase ng 20% sa sales sa next year, so ang ilalagay po natin dyan ay 20%. So, the 20% of 2 million is per 100,000. So, yung magiging sales po dyan ay 2 million per 100,000. And then, yung cost of sales is 1 million per 140,000. So, kunin po natin yung 60% ng 2 million per 100,000. Bakit po 60%? Kasi dyan sa copy niyo po, yung sa illustrative case po na copy niyo, yung cost of sales po na 1,200,000 is 60% of 2 million. So, pinareho lang po. So, 60% cost of sales. Okay? So, yung 60% po ng 2.4 million is 1,440,000. Now, to get the gross profit, ilaless lang natin yung sales sa cost of sales. So, ang magiging gross profit po is 960,000. Okay? Next, operating expense, get the 19% of 2.4 million. Okay, so yung 19% po ay 456,000. Same lang din po yan sa copy po ninyo. Yung operating expense po na 380,000 ay 19% ng 2 million. Okay, earnings before interest and taxes, 504,000. So, ililess lang natin yung 960. Okay, 1,000 minus 456,000. Yung gross profit, less po sa operating expense to get the earnings before interest and taxes. And then in your copy po, meron pong interest expense dyan na 70,000. Same lang din po dito, which is 70,000. Para makuha yung earnings before taxes, ililess po natin yung 504 or 504,000 sa 70,000. So, yung earnings before taxes is 434,000. Okay, and then, meron pong nakalagay dyan na taxes, which is 35,000. Same lang din po doon sa copy po ninyo na as of December 31, 2019. So, yung 35% po ng 434, okay, 1,000 is 151,900. Okay, then ililess po natin yung dalawa, yung earnings before taxes and then the taxes, yung 35% ng earnings before taxes. So, yung magiging earnings na after taxes is 282,100. Okay, so pagdating naman sa dividends, hindi natin yung 36% of payment. Kagaya rin po yan dyan sa copy po ninyo ng 2019. Kung kukunin natin yung 36% po ang ng 282,100 na earnings after taxes. Ang lalabas po dyan is 101,556. So, isasarado na po natin 600. 101,600 para mabilis po ma-distribute yung dividends. Okay? Okay, step number 2, forecast the statement of financial position. The projected statement of financial position will show the following. So, makikita nyo po dyan, same lang din po yan sa copy po ninyo, pero magkaiba na po yung amount given kasi nga, nag-expect yung company ng 20% increase sa sales sa susunod na taon. So, yung cash po is 60,000. So, paano po nakuha yung 60,000 na cash? Ang gagawin lang po dyan, yung 60,000 po, that is 2.5% ng 2,400,000. Okay? Yan po yan. Again, para makuha po yung 60,000, kukunin nyo po yung 2.5% ng 2,400,000. So, multiply nyo lang po sa 0.025. Okay. And then yung accounts receivable na 480,000, yan po ay 20% ng 2,400,000. And then yung inventory, which is 900,000, yan naman po ay 37.5% ng 2,400,000. And then ito total lang natin para makuha yung total current assets. So, yung magiging total current assets niya is 1,440,000. Then po sa copy ninyo, total current assets po ay 1,400,000. Okay, next, sa liabilities and equity, yung accounts payable, 300,000. Paano po nakuha yung accounts payable na 300,000? That is 12.5% ng 2,400,000. Okay? And then, accrued wages, 12,000. Yan naman po ay yung accrued expenses. Okay? Or wages. Yan po ay 0.5% ng 2,400,000. So, yung 0.5% ng 2,400,000 is 12,000. And pagdating po sa accrued taxes, yan po ay 1% ng 2,400,000. So, yung 1% po ng 2.4 million is 24,000. Okay, and then ito total lang po natin yung liabilities na yan. So, pag tinutal natin, ang lalabas po ay 336,000. So, yung notes payable, 70,000. Long-term debt, 150,000. And ordinary shares, 480,000. So, in your copy, tignan niyo po yung copy po ninyo. Kung pareho lang. So, dyan po sa copy niyo yung notes payable po ay notes payable bank is 70,000. And then yung long-term debt is 150,000. Yung ordinary shares po ay 1,200,000. Okay. So, bakit hindi po yan nabago? Kasi according po dun sa may given, okay, ang nakalagay po dun, the increase in sales expected to carry out without any expansion of fixed assets, but rather through more efficient assets utilization in the existing store. Then, among liabilities, only current liabilities vary directly with sales. So, yung total, yung current liabilities lang po ang affected po sa sales. Ayan, vary directly with sales. Pero yung other expenses po, hindi na po kasama, including po yung sa ordinary shares. Okay? Then, paano naman po nakuha yung return earnings? Yung 480,000 na yan. Paano po nakuha yung return earnings na 480,000? Saan po yan nanggaling? Yung return earnings ng 480,000. Iwan. So, yung return earnings po, nakuha po yan saan? Diyan pa rin po sa, yan. Ang gagawin lang po para makuha yung return earnings, which is 480,000, yung 300,000 po ng return earnings ng December 31, 2019, 300,000 po yan. Diyan sa copy nyo yung return earnings. Ipa-plus po sa 282,100. Yung 282,100 po, yan po yung earnings after taxes. Diyan po sa step number 1. Makikita nyo po yun, yung forecast the income statement. Okay. 282,100. And then, ima-minus po sa dividend. So, yung dividend na kukunin is yung 2020, susunod na taon, which is 101,000. So, ang magiging result is 480,000. Okay? Yung pag nakuha na po yung 480,000, ang gagawin lang po ay i-add yung total current liabilities, and then yan, i-add nyo lang po yan hanggang dun sa return earnings. So, yung magiging total po ay 2,236,500. And then, magkakaroon po ng additional financing required. Ayan po. Magkakaroon ng additional financing. O, required po yung additional financing. Kasi nga po, hindi siya magbabalance doon sa may assets niya. So, yung additional financing po is 3,500. Okay. May explain ko po yung paano po ng additional financing required. So, magiging total po ng liabilities and equity is 2,240,000, which is balance. So, dito po sa pag-forecast ng statement of financial position, dito nyo po makikita kung meron bang surplus sa funds or nangangailangan ba ng additional financing yung isang firm. Okay, so based po doon sa pag-forecast po natin ng statement of financial position, lumabas po doon na yung additional financing is required. Okay, so how much po yun? 3,500. So, paano po nakuha yung 3,500? Okay, now to get the additional financing required, we will use the formula po. Ito po yung formula method. Additional financing needed, or AFN, may also be computed as follows. Additional funds needed is equal to required increase in assets minus spontaneous increase in liabilities minus increase in return earnings. So, para makuha po natin yung required increase in assets, gawin po natin yung change in sales, i-multiply po sa current assets, which is present, and then i-divide po sa sales, which is present. So, yung change po ng sales po from 2 million to 2,400,000. So, yung 400,000, yun po yung change in sales. Okay? And then, yung current assets po, present, yung titignan nyo po is yung December 31, 2019. So, yung current assets po ng December 31, 2019 ay 1,200,000. And then yung sales, yung present, titignan nyo po doon sa income statement ng 2019, which is 2 million. Okay, so yung 1,200,000, i-divide po muna sa 2 million bago po i-multiply sa 400,000. So, ang naging answer po dyan is 240,000. Okay, next, proceed po tayo sa spontaneous increase in liabilities. So, yung change ng sales, same din, 400,000 times current liabilities, which is present. So, tingnan nyo po yung current liabilities nyo po dyan sa December 2019. So, ang nakalagay po na current liabilities po dyan ay 280,000. So, ito po ay 280,000 po. Ayusin ko lang po. 280,000. That's the current liabilities po ng December 31, 2019. Okay, pakicheck na lang po. Again, that is 280,000 total current liabilities. Okay, and then yung 2 million, yan po yung sales present ng December 2019. Ganun din po yung 280,000, i-divide po muna sa 2 million, saka po i-multiply sa 400,000. So, maging answer po dyan is 56,000. Okay, and then, next po ay increase in return earnings. Yan naman po, para makuha yung increase in return earnings, titignan nyo po yung forecasting natin kanina. Yun po yung step number 1, yung forecast the income statement. So, yung nakalagay po dyan, earnings after taxes is 282,100. And then, yung dividend po ay 101,600. So, pag niles nyo po yung dalawa, ang magiging answer po dyan is 180,500. So, less natin yung 240,000 minus 56,000 minus 180,500. So, ang kailangan po natin na additional financing sa firm ng Millennial, okay, or Millennial Company po ay 3,500.